RxSight stock, RXST, is trending sharply downward after the company issued a disappointing pre announcement for its Q2 results and slashed its 2025 sales outlook, triggering a wave of bearish sentiment in after hours trading. The company now expects 2025 revenue in the range of $120 million to $130 million, a significant cut from its prior forecast of $160 million to $175 million, and well below the street's consensus estimate of $167.6 million, according to LSEG data. For Q2, RxSight's preliminary sales came in at $33.6 million, falling short of analysts' average estimate of $39.8 million, further fueling concerns about the company's growth trajectory. JP Morgan analysts weighed in bluntly, warning that the update reflects a continued worsening of trends first seen last quarter rather than a hopeful improvement. They added that the weakness appears likely to extend into the second half of 2025 with no clear resolution in sight. This comment has heightened fears that the company's struggles may not just be a short-term setback, but could point to deeper structural or execution issues. Within the trading community, sentiment is mixed but tense. Some traders argue the sell-off may be overdone, noting that the company's cash position could provide downside protection and make the current levels attractive for speculative buying, especially if the stock trades near or below net cash value. There's also chatter about the possibility of RxSight becoming a buyout candidate if the share price remains depressed. Others, however, are voicing frustration and caution, arguing that the guidance cut and the miss in Q2 sales suggest a fundamental slowdown that could take multiple quarters to fix, or might even point to a lack of market adoption for its adjustable intraocular lens technology. The debate now focuses on whether the stock can find a bottom soon, if patient investors will step in at these levels, and whether management can articulate a credible turnaround plan in the upcoming earnings call. Until then, the path forward for RxSight remains uncertain, and the after-hours sell-off suggests many investors are not willing to wait and see. The stock printed an intraday of $7.65 from $12.79 as a result of the disappointing sales forecast. On its 4-hour chart, a neutral to distributive consolidation is expected to play out up till Friday, the 18th of July, and it has an upward projection of $11.13. It is currently trading between its resistance and support values based on the market grid. Given the prevailing negative sentiment, expect the stock to test the lows of $6.60. At such a price, the buy the dip opportunity would have improved. However, nothing stops it from printing prices lower than $6.60 when it dips to such lows. Thanks for watching the video.